Want to kick things off for us?
All right, sounds great. I don't know if you guys can see me right now, but I'm Emily Marsh from the Chamber of Commerce, and I just wanted to thank you for tuning into this webinar today. We have a lot of topics to cover with our panelists, and so I'll be introducing Josh soon, but I just wanted to say, we really feel for businesses at this time. If you are facing challenges due to current situations, I encourage you to check out the Chamber website. We have a direct link from our homepage to a resource page for covering a lot of topics related to the COVID-19 situation. So please check that out if you're looking for resources right now. If there are things that we're not covering or you'd like us to talk more in depth about in another webinar or with more resources on our website, please reach out to me at the Chamber. My email address is events@concordnhchamber.com. So CheckmateHCM is a fantastic company, Chamber member. Just a shout out that the Chamber actually utilizes some of their services. So we highly recommend them, and they have a lot of skills that can help you out in this situation. So without further ado, I'd just like to introduce Josh Robinson, who's gonna kick things off. Thank you.
Perfect, thank you, Emily. And for those who don't know me, I look nothing like the gentleman on the screen here. This is a stock photo that I have no idea where we even got it. So anyway, thank you everybody for dialing in to the webinar today. I know that everybody has a lot on their minds. These are very stressful times, and you know, we are in the same boat as you are. Just to give you a little bit of background, again, my name is Josh Robinson. I'm the president and owner of CheckmateHCM, also known as Checkmate Payroll Services. We are a company based here in Concord. Currently, we employ 16 employees, and we service approximately 600 employers, providing HCM technology, you know, a web-based application through which you can manage every aspect of your workforce, from timesheets, you know, clocking in, clocking out, requesting time off, through benefits enrollment, payroll administration, and all aspects of HR. Within one platform. But at the end of the day, the core function that we serve, the thing that is most visible to most of our customers on a day-by-day and week-by-week basis is we are a payroll company. We process everybody's payrolls. We transmit and manage the processing of the direct deposit transactions and cutting live checks and whatnot. So we are, you know, deeply involved with all aspects of the recently enacted the FFCRA, or Families First Coronavirus Response Act. And that is the new legislation which mandates that all employers with fewer than 500 employees provide paid emergency sick leave and paid family leave for your employees. As Emily said, there is a lot of material here for us to cover, and there is some new developments that came through with the legislation signed on Friday in regard to what's now called the CARES Act. That I will get into for a few minutes. I am going to get through all of my material so that we have 15 minutes for Q&A. Before I start, I need to open with a caveat, which is to say, you know, everything that is contained within this presentation is based on legislation that has been signed sometime within the last 2 to 2.5 weeks or so. As most of you on the call probably can appreciate, these laws that are enacted by our federal and sometimes at our state legislature level are enacted by people who have no conception for what it takes to comply with the law that they just imposed upon us. And so, you know, what my goal here is this afternoon is to break it down to the most basic level that I can, so that everybody understands at the most fundamental level what your basic obligations are in regard to the FFCRA, and then also to speak to some elements of the CARES Act, which are very pertinent and relevant to employers today, because there is nothing about FFCRA that was done or put in place that was done to benefit employers. The FFCRA is a burden for employers. It is new requirements that require you to shell out money for your employees to not work. Now, for most employers, it does come with an ability to receive back in the form of a tax credit, monies that would offset the expense you incur. But at its most fundamental level, this imposes new regulatory burdens on all employers with fewer than 500 employees, and it's really the CARES Act that passed on Friday that includes some really beneficial components for employers, and I will touch on that as well. But we may very likely be scheduling a separate standalone webinar just for the CARES Act. So as I proceed through this, before you take action on anything that I advise you on here, do keep in mind there are details I'm going to share in this webinar that are new and different from the details that were in my original webinar, which was last Wednesday at noon. That's because whenever a law is passed, the law is one thing, but the regulation is another thing entirely. And the regulation is the manner in which we are compelled to comply with the law, which is pushed down on us through usually the Department of Labor or the IRS, or in the case of the CARES Act, there will be elements of that are coming through the Small Business Administration. So with all that said, these are moving targets right now. I am going to give you the most up-to-date, current, and pertinent information that I can today, but it's not to say that what I tell you today isn't going to change tomorrow. This is one of the downsides of quickly enacted federal legislation. Again, there is enough real solid information to share, though, for this webinar to be very much worth your while. That said, I'm going to dive right in to the presentation. And again, my goal here as the owner of CheckmateHCM, the owner of a business that employs 16 people, the owner of a business who gets all of our revenue from our customers, whose payrolls that we process. My passion, my inspiration right now is to do whatever I can to help as many employers stay in business as possible. So I am through this webinar, making myself available offline to questions and anything else that anybody who's on the webinar might want to reach out to me about, because I have made it a point to become as much of an expert on all of these things as I can, not just for our existing customers, but for any employers, especially local New Hampshire businesses, because we are all at risk here, and we're all in this together. So that said, here's our agenda. I'm going to quickly go into a little bit of what has happened so far and what is to come, and then I'm going to dive right away into the Families First Coronavirus Response Act. I'm going to spend about 10 or 15 minutes covering the core details there. For the CARES Act and applying for SBA loans, I'm going to spend another 10 minutes or so, maybe 15, on the CARES Act. But again, it's going to be very, very, bullet point driven here. And then I'm going to get into some workforce reductions, layoffs versus furloughs versus making use of what's called New Hampshire Work Share, which is a way of reducing the hours for your staff and allowing them to receive limited unemployment benefit instead of laying them off entirely. And then, as I said, we will end with Q&A. So firstly, what has happened so far and what is to come. Now, this particular slide I did not have a chance to update from Wednesday, so there's some additional developments that I will get into. But again, I want to reiterate for clarity here, the Families First Coronavirus Response Act is intended to force employers to keep your employees on staff and pay them for time that they are not working in a world where you previously may have decided for disciplinary or attendance issues to let somebody go because they are now in a position where their child can't go to daycare because their daycare closed due to COVID-19, or because they, typically you previously never offered sick pay to traditional hourly employees, and you have an hourly employee who now needs to take 2 weeks of paid sick time to quarantine. The Families First Coronavirus Response Act was entirely intended, with exception of a couple of items that I'm not even going to get into here, to benefit, in the context of the paid sick leave and paid family leave, to benefit employees and to prevent you as employers from being able to let them go simply because of a coronavirus-related issue that causes them to be unable to perform their essential duties. Keywords: to perform their essential duties. If at any point along the way any of your staff need to stay home to take care of their kids because of a school closure, but they could still perform their essential duties, then it is not your obligation to pay them for emergency sick leave or extended FMLA because they could perform those core duties at home. So performing essential duties is a key piece of these equations, because I've often been asked the question, before I move on to the next one, about, well, so we're being forced to shut down because the state has mandated, that all non-essential businesses close. If you are forced to shut down because all non-essential businesses must close, then you do not have a position for your employees to perform. Therefore, there are no essential duties for them to perform. Therefore, you are not on the hook for paying for emergency paid sick leave or emergency or extended FMLA. In that context, you would need to lay them off or furlough them, and then they would get unemployment benefits. But the Families First Coronavirus Response Act literally is only for those situations where you have a role for somebody to perform and they cannot perform that role due to one of the COVID-related reasons, and then depending on the context, which I'll get into in a few minutes, it will determine whether or not you owe them 100% of their normal pay or 2/3 of their normal pay. And then the coronavirus, or rather the FFCRA, also did put in place some emergency expansion of unemployment benefits, and that was further extended by the CARES Act, which passed on Friday. So now with the CARES Act in place, employees can receive up to 100% of their full normal compensation for up to 4 months through the unemployment, the state unemployment trust funds, which, much of which is now going to receive additional funding through the federal government in order to pay for some of these additional benefits. Before I move on from that, just another piece of info. The governor, in one of his executive orders, the New Hampshire Governor Sununu, one of his original executive orders did mandate that all COVID-related unemployment claims will not be charged against the unemployment account of the individual employer who would normally be the chargeable employer. And that applies to those that participate in the unemployment trust fund, and it also applies to those that are what they call reimbursable employers, which many nonprofits are, where you don't pay unemployment taxes, but instead you owe dollar for dollar every penny of unemployment claims that are paid out on behalf of your former employees. That will not apply to you for any COVID-related unemployment claims. Those will be assessed separately and not charged to individual employer accounts. So no employers have any reason, with the exception being that, if you could keep them on payroll, no employers have any reason to hesitate to encourage your employees or those whose hours are getting cut or perhaps need to be furloughed or laid off. There is no disincentive for you to send them full speed ahead to get as much benefit from unemployment as they can. And that is one of the things that has now been put in place that is to the advantage of employers. And then we have, forced closures of many businesses via state mandate, as you know, voluntary closures of even more, for But now that the governor made the decision that he made on Friday or Thursday evening or afternoon, you know, the voluntary closures aren't so much happening anymore, since most of those that are still open are essential businesses. And of course, your day at school and daycare closings causing the inability for the employees to perform their essential duties. Again, key word, perform essential duties. And then, of course, these new government mandates that are imposing these burdens on employers, just as you are in survival mode, with the market tanking to unprecedented levels, and, you know, the unemployment situation looking like it does. Again, you know, the last thing we need as employers is more federal mandates to comply with. But that's where Checkmate comes in to help. So the Families First Coronavirus Response Act, for emergency paid sick leave, you're going to see me differentiate within the FFCRA two items. There's emergency paid sick leave, and there's what I'm calling emergency or extended FMLA. Emergency paid sick leave is the mandate that all employers with fewer than 500 employees provide up to 80 hours of emergency paid sick leave to all of your employees. And the rules around employment here, basically immediately upon becoming an employee of your company, you are obligated to provide up to 80 hours of emergency paid sick leave to all employees. Now, for hourly workers who work less than 40 hours a week, that 80 hours can be prorated. However, you know, your obligation is to provide, as of April 1st, 2020, immediately for all existing staff, and then in the future between April 1st and end of year, the full balance of paid time off or emergency paid sick leave that they would be entitled to based on whether they are a full-time person or the fraction of a full-time person that they represent. You must offer this in one fell swoop. So basically, as of 4/1, if you employ 15 full-time people, you have 15 full-time people that all have a bank of 80 emergency paid sick leave hours that they can use between now and 12/31/2020. But the use has to fall into one of the coronavirus-related categories. So before I continue, I do want everybody to understand that this legislation effective date is April 1st, 2020, and the expiration date for the FFCRA is 12/31/2020. There is zero obligation in the legislation that carries over between December 31st, 2020 and 2021. So all of these obligations end at the end of this year, and take effect as of 4/1/2020. Now, for those folks who might be on putting people on furlough or doing a temporary layoff, and now with the Paycheck Protection Program, which is part of the CARES Act, you might now be in a position where you can, you know, keep all of your people on payroll and continue to pay them even though they're not working. Basically, what this means is that, you know, if your employees don't have a function to perform because you have had to shut down some or all of your company, between now and when you are back up in operation, those are not situations where you need to comply with granting the emergency sick leave or the extended FMLA leave to those employees who are on 100% paid furlough because they don't have a job to perform. Again, there must be a job to perform that cannot be performed due to a COVID-related reason that would then compel you to pay an employee for emergency paid sick leave or extended FMLA. And if you are shut down, or a whole department or a whole company is shut down, there is no job to perform. So until they are come back from furlough or temporary layoff, your obligation to provide this paid leave does not exist. But as soon as you open up again, between the point in which you bring those people back on full time and end of year, you do have this obligation to provide, in the case of emergency paid sick leave, up to 80 hours of paid leave due to a coronavirus related reason. So those reasons are for the employee's own need due to their own coronavirus or COVID-19 diagnosis or quarantine, or due to the employee's, and when I say quarantine, that can be either the employee's self-quarantine or a mandated quarantine, and or due to the employee's need to stay home to care for a loved one or because their child's daycare or school is closed. So emergency paid sick leave can be used for either the employee who has COVID-19 themselves or thinks that they might and is in quarantine, or because the employee needs to stay home to care for a loved one that has COVID-19, or because the employee needs to stay home to take care of a child whose daycare or school has closed due to COVID-19. Those are, for whether we're talking about emergency paid sick leave or extended FMLA, those are the end all and be all. Those are the rules. If they don't qualify for one of those reasons, then you do not have to pay them emergency paid sick leave or extended FMLA. Now, depending on which of these reasons applies, dictates how much you need to pay them. So if the employee is using emergency paid sick leave, what I'm calling emergency paid sick leave employee, which is for their own coronavirus or COVID-19 diagnosis or quarantine, then the rate of pay for emergency paid sick leave is 100% of the employee's regular rate of pay over the last 6 months. Now, these are phrases that are very important when it comes to the Fair Labor Standards Act. The regular rate of pay is not the base hourly rate that you pay an employee, or it sometimes wouldn't be. The regular rate of pay would account for their base hourly rate plus any other compensation that they earned over the last 6 months, divided by the number of worked hours over that duration of time, to come up with a rate that is likely going to be somewhat higher than what you consider to be their base hourly rate. If they earned overtime during that period, if they had a bonus, et cetera, et cetera. But the obligation is to pay for an employee who's using their sick time for their own COVID diagnosis or quarantine, self-quarantine for their own reason. You're obligated to pay them 100% of their regular rate up to 80 hours for the calendar year 2020. If they are using the emergency paid sick leave for their family, now emergency paid sick leave as a concept has a maximum bucket that can be no more than 80 hours for all of 2020 based on whether they're a full-time person or part-time. And whether they use that 80 hours for what I'm calling emergency paid sick leave employee, or they use it for emergency paid sick leave family, they only have 80 hours to use. But if they are unable to perform their essential duties due to the need to care for a loved one with COVID-19 or to care for a child whose daycare or school has closed, but they themselves would otherwise be able to work, then they are using emergency paid sick leave family, and you're obligated to pay them 2/3 of their regular rate of pay over the last 6 months for the whole duration of time during the first 10 days of leave that they are using it for family purposes. This is available for immediate use by all employees regardless of tenure. So as soon as you bring a new hire on after 4/1, you have to grant them their bank of emergency paid sick leave. The emergency paid sick leave earnings are exempt from Social Security tax and FUTA, and the language of the law makes it sound like they're also exempt from the employer side of Medicare. I'm still doing research around that, but they're at least exempt from Social Security and FUTA. So the emergency paid sick leave employee, again, the amount of pay that you pay that person who is out because of their own COVID-19 diagnosis or quarantine, the maximum amount that you are on the hook to pay any employee is $511 per day or $5,110 in aggregate for 10 days or 2 weeks. The emergency paid sick leave family is is capping out at $200 per day or $2,000 in the aggregate for 10 days or 2 weeks. And this is all lumped into this category that I'm referring to as emergency paid sick leave. And the two things can happen simultaneously. You could theoretically have somebody who's out with COVID-19 themselves. Now, I don't know exactly how much care they'll be able to offer their loved one or the child who's not at daycare, but theoretically speaking, the two things could happen simultaneously, but they are not allowed to have more than a combined total number of 80 hours if they are a full-time person in 2020 between the two. And it must be granted to all employees that are currently on staff as of 4/1/2020. And the rules for emergency paid sick leave follow the Fair Labor Standards Act, which is where the regular rate of pay language comes into play. It's also where the fact that there is no span of time between when you bring them on and when those rules apply. The Fair Labor Standards Act has no waiting period. As soon as you hire somebody, those rules apply, as opposed to emergency paid leave or extended FMLA. So emergency paid leave / extended FMLA, depending on where you look, the terms are being used synonymously, basically is an extension of the Family and Medical Leave Act, which historically has only applied to employers with 50 or more employees. But now in the context of EFMLA, this regulation now applies to all employers with fewer than 500 employees. So you will be obligated as of 4/1 after the first 2 weeks of time or pay, time off, if you will. You will be obligated to provide 10 additional weeks of paid family leave to employees who cannot perform their essential duties due to coronavirus-related closure of their child's school or daycare. Again, this additional 10 weeks, there is a very, very specific mandate. Any employee after the first 2 weeks of leave, which more likely than not are going to drain the emergency paid sick leave bucket, any employee who still cannot perform their core and essential functions because their child's daycare or school is closed can receive 10 additional weeks of paid family leave in order to take care of their child, and only for that reason, and only if that obligation prevents them from performing their essential duties. So for instance, I have a whole bunch of my staff right now who are working from home, and I have a whole bunch of employees who have kids. And what we are doing right now is we use our own technology. So everybody is clocking in and clocking out to indicate to everybody else in the company when they are on the clock, because we're collaborating via Skype since we're working remotely. So everybody looks at our attendance board to see if Sally Smith is online right now, and as long as she's on the clock, I'll send her a Skype message and ask a question. But in the interim between, basically whenever anybody needs to take a break to move their kid on to the next homework assignment or something like that, they clock out for however long they need to, and then they clock back in when they're back working. Now, the reason why we're doing this isn't to dock their pay or pay them less. It's simply to accurately reflect how much of their time was actual work time versus how much is, in essence, emergency sick pay family time or EFMLA time after we get through the first 2 weeks of leave. So again, I just wanted to describe to you how I'm handling this myself, so that I can still pay my people for the time that they're home having to help their kid move on to that next homework assignment, but also get my tax credit, which I'll be able to do for all instances where there are these gaps of time in the workday for my workers who are working remotely. I'll be able to get my tax credit by calculating, the fractions of their day that are being used for, in essence, emergency paid sick leave family. And the rate of pay for emergency paid sick leave family is 2/3 of the regular rate instead of 100%, like the emergency paid sick leave for the employee. The emergency paid family leave follows the FMLA rules. And the FMLA rules, used to say that the employee had to work 1,250 hours and at least work the last 12 months in order to qualify. Well, for EFMLA, the rules now are that the employee needs to have been employed for at least 30 days at the time that the leave is needed. So for any employees during those first 30 days of employment, if they actually get to the point where they would need to draw on the EFMLA, you have no obligation to provide that to them until they have been employed for at least 30 days. And the EFMLA earnings are also Social Security and FUTA exempt. The maximum amount that you can pay an employee in any given day for EFMLA is $200 per day or $10,000 in aggregate. And that's $200 a day for a span of 10 weeks for a total of $10,000. And that's in addition to the maximums for emergency paid sick leave and the emergency paid sick leave family. And based on the way that the emergency paid family leave rules work, as I said before, FMLA is now a requirement in the context of emergency paid leave that all employers with less than 500 employees need to comply with, not just those that have more than 50 employees. And it also appears to change the rules as far as the waiting period between which you have to comply, from the date of hire to where you have to comply with FMLA in the context of EFMLA. Now you have a 30-day window and no consideration for the number of hours worked versus the old rules, which still apply to standard FMLA, which require 12 months of work and 1,250 hours. And if an employee has maxed out their 12 weeks of unpaid FMLA, they will still qualify for emergency FMLA for the entire duration that the paid leave would last if they had not otherwise hit the 12 unpaid week FMLA threshold. So that's a repeat slide. There is an exemption which right now there is no guidance around. Basically, the exemption states that at the discretion of, I forget who it is. It's the perhaps it might even be the Secretary of the Treasury, or at the discretion of someone at a very high level. Exceptions can be made to employers with 50 or fewer employees if the obligation to comply with the leave requirements relating to school closings or childcare unavailability would jeopardize the ability of the business to continue. There has yet to be any further guidance on exactly how you would comply or request that exemption. My understanding is right now you would just need to document the reasons why you should be exempt, and then keep your eyes peeled for more news on how to get that exemption. But right now there is nobody that you would actually request an exemption from, and there is no process to use to get that exemption, even if you knew who to send it to right now. So more news on that later, but there is supposed to be rules around which you could get exempted, but based on the vague language and all of the things that they're now doing with the Paycheck Protection Program and whatnot, I expect that the exemption is probably going to be limited in the amount of generosity they have in granting it. That's just my thought. I'm not basing that on any real knowledge. And there is a non-enforcement period. So basically you have 30 days from the effective date. Effective date is 4/1. If during the first 30 days you are non-compliant with the law. You will not have any penalties or any auditors coming down on you for your non-compliance in the first 30 days, as long as you demonstrate, and act reasonably and in good faith to comply with the act as soon as possible. So technically speaking, all of these things that I'm going through right now in regards to FFCRA, as long as you have them in place no later than May 1st, you should be good. But at the same time, you should put yourself in a position to comply as soon as humanly possible. May 1st being the absolute drop dead. If you're not compliant by then I would expect that I don't think that it's going to be taken lightly. Employers that are not compliant with these rules, I suspect that there's going to be some serious repercussions. But there isn't any information I can share with you about what are the penalties for non-compliance. It hasn't even been discussed at this point. So tax credits, you have the ability to receive tax credits for each of these three types. As you can see, the tax credits that you have the ability to receive fall directly in line with the maximum amounts of pay that can be received by the employee for each type of time. So your maximum tax credit for emergency paid sick leave employee is $511 per day, or $5,110 in aggregate. Your maximum for the employee or for family emergency paid sick leave is $200 a day, or $2,000 in aggregate. And then the maximum for the emergency paid family leave, or EFMLA, is $200 per day, or $10,000 in aggregate. And I didn't finish this sentence in the last bullet, but basically, when it comes to the application of the tax credit, you can incorporate the employer's cost of health insurance into that calculation of how much you're entitled to for the tax credit. So for instance, if you as the employer, for a given employee who uses emergency paid sick leave employee, are on the hook to pay them for $400 in a day, and your cost for the health insurance, comes out to $30 a day, then you would be entitled to receive a total credit for the compensation given to that employee for that day of $400 for the actual gross pay that you issued to the employee, plus the $30 employer cost on the health insurance that corresponds to that compensation, for a total tax credit of $430 instead of just $400. So, excuse me. What that means is that in order to maximize the amount of tax credit money that you get, you will need to have a method of prorating or calculating the fraction of the employer cost of health insurance that applies to each of the different types of emergency paid sick leave or EFMLA time, so that you can add that to the amount that you're going to get your credit on for that employee, and not just base it on the gross pay. So in this slide where I identify what Checkmate is doing to help, this is really meant to convey what you should be looking for from the company that you currently work with that provides payroll services, or perhaps your timekeeping and HR technology. Basically, what we are doing is we are helping our customers creating the time off categories and the accrual rules for the three categories of time off here. We are also configuring those accrual rules into the system and setting up earnings codes to help our customers so that we can pay out, with the unique taxation of these earnings, and then also help our customers receive back the tax credit money as soon as humanly possible, aka within the same week as when the cost is incurred for the emergency sick leave, and then documenting everything so that we can share with our customers how to manage and maintain their own codes And then finally, we are putting up a COVID-19 webpage, which should be up there tomorrow, hopefully, with all of the useful information that we're keeping track of. Again, I would expect that the company that you're working with on timekeeping and HR technology or payroll also is doing things like this for you. And if they're not, then you should reach out and ask about, what their plans are to help. Additional resources here. So everybody who's on the webinar will get a copy of the presentation so that you can use these links, but these are just a couple of really good resources for additional information. The FAQs website on the USDOL is very extensive. It covers so many details on what about this unique situation or that unique situation, et cetera. So I highly encourage everyone on the call to check out these links. And the intention with the tax credit, technically speaking, the language in the law is vague on, whether it is preferred that the credit be received when you file your quarterly returns, or that the credit would be received by offsetting your current pay period's 941 tax liability by the cost that you're incurring. What we are aiming to do for our customers is to make it so that the credit is received in the same payroll in which the emergency sick leave or extended FMLA pay are made, so there is zero delay between incurring the cost and when the credit is received. But I don't know what other companies are doing, payroll companies are doing. We are making this work so that our customers get their credit as close to real time as possible. So moving on, and I know I've spent a little bit more time than I had planned to on the first part. The CARES Act that passed on Friday. This is the one that actually has elements that are beneficial to employers. And contained within the CARES Act is something that is called the Paycheck Protection Program. For small employers, this is a program that is going to be administered through the Small Business Administration through what's called the SBA 7A loan program. That is the SBA's standard loan program. And this means that this is going to be managed by the local lenders, the banks that work with the SBA on all of the other SBA lending programs. And I highly encourage everybody to reach out to your banker to start the conversation with them about how they are going to assist you in applying for your Paycheck Protection Program loan. The loans, basically what's going to happen here is for the Paycheck Protection Program, you are entitled to a loan that will be approximately 2.5 times the average monthly payroll cost that you have incurred between 4/1/2019 and 3/31/2020. Based on whatever your average monthly payroll cost was in that span times 2.5, that will be approximately what the maximum amount of a paycheck protection loan will be that you can get through the SBA. And as long as you use that money, or rather, as long as you don't lay your people off during the time in which you have those funds, you will then not be on the hook to pay back the loan. I do not know the exact mechanism right now through which you will prove that you met your obligation and therefore have that loan converted into a grant. All I know is that as long as you keep your employees, employed with that Paycheck Protection Program money, the loan will be forgiven, and that the loan itself will be 2.5 times your average monthly payroll cost. Average monthly payroll cost can include your all elements, not just what you pay your staff, but also the employer cost on all benefits, the employer cost on retirement, et cetera. All of those things can be added in so that you get 2.5 times whatever that number is as far as your loan amount goes. And then the entirety of that loan will be forgiven as long as you adhere to the conditions set forth for forgiveness, which to my knowledge right now is simply that you maintain employment of those people that you otherwise would have been forced to let go if you did not have the paycheck protection money. Now, there is no details in the legislation that I'm aware of, that I have seen, that actually obligates you to need the money in order to apply for it and get a commitment from the federal government to give it to you. Therefore, I encourage absolutely everyone to apply for it. You know, even if your books are healthy enough that you could continue to pay your payroll for a year without having any income, you may as well apply for this program and get your paycheck protection program you know, monies in place, because right now we're dealing in a world of uncertainty. You know, I don't think anybody is in a position to know with certainty whether or not you're going to have the funding to cover all of your costs a month from now, 3 months from now, 6 months from now. So I highly encourage everyone to reach out to your banker to start the conversation on the Paycheck Protection Program, which is part of the SBA's 7A loan program, and it's truly intended to cover the cost of retaining your employees between now and when things get back to full business, which they're optimistically speculating might be 2.5 months from now. In addition, the SBA has economic injury disaster loans, and I highly encourage people to consider applying for one of these as well, and an emergency economic injury grant. Now, 2 weeks ago or so, I applied for one of these loans for my company just so that I could, as soon as possible, start moving down the path with SBA. But emergency injury disaster loans are loans where you would apply directly to the SBA. You do not apply through a bank, and you can have an emergency injury disaster loan simultaneous to a 7A loan. You just can't use the emergency or the economic injury disaster loan money to pay for the things that the Paycheck Protection Program is designed to pay for, and vice versa. There has to be a clear differentiation between which program you're using which money for, and the economic injury disaster loan and emergency economic injury grants do not have any concept of forgiveness included. So for these loans, you're looking at, for private employer, a 3.75% rate. For a nonprofit, it's either 2 or 2.75% on the economic injury disaster loans. The emergency economic injury grant, though, is interesting because through this grant, you can actually get the government to immediately give you $10,000 to immediately stem the tide on any bleeding that's happening right now, as soon as they approve your application for the economic injury disaster loan itself. So the $10,000 can be issued immediately once your economic injury disaster loan is processed. You know, and then what would happen here is that you would have $10,000, because the maximum amount for the emergency economic injury grant is $10,000, and that would actually, $10,000 of your Paycheck Protection Program money would no longer be considered convertible to the grant. It would be loan money that you would still have to pay back if you took advantage of the emergency economic injury grant in the context of a 7A loan for the Paycheck Protection Program. You know, rather than having it as part of the economic injury disaster loan. And then there are small business tax provisions within the CARES Act. For instance, if you don't participate in the Paycheck Protection Program, you can actually have it such that all of the employer costs on 941 taxes between now and the end of the year, you do not have to pay until 2021 and 2022. You can push off your payment of all of those 941 taxes, the employer cost on those taxes, if you do not participate in the Paycheck Protection Program between 4/1 and 12/31 of this year. You can push that off until 2021 or 2022 if you do not participate in the Paycheck Protection Program. And there are a couple of other attractive business tax provisions as well that also apply if you don't participate in the Paycheck Protection Program. I highly encourage everyone on this call to take a look at the link here to the Small Business Owner's Guide to the CARES Act, which was produced by the Senate Committee on Entrepreneurship, produced this document. It's a rare thing that I have good things to say about documentation produced by the federal government, but this one is actually really well put together. I highly encourage everyone to take a look at it. So now a brief, just kind of a brief dive into furloughs versus layoffs. So we're all in a position here where the we're needing to take a look at our bottom lines. And, when it comes to layoffs versus furloughs, as this slide says, the number one thing that you need to give consideration to and to put into writing is what is your intention. But technically speaking, a layoff is the termination of an employment relationship. When you lay people off, you have to pay them 100% of all of their accrued time that you would otherwise owe them. And once they receive that final paycheck, there is no tie between them and your company anymore, period, with the exception of their ability to participate in your health plan via COBRA. But a layoff is a COBRA event. And the most important thing to understand here is the difference between a furlough and a layoff. A furlough continues employment, but it will either reduce their hours or require a period of unpaid leave. So the idea with a furlough is really, we want to maintain the employment relationship, but we are in a financially tight spot. We need to look at the health of our company, and we all need to sacrifice, and we are going to, make this equitable by sharing the burden of that sacrifice by taking a 20% pay cut across the board. Everyone now immediately has a 20% pay cut. Or perhaps, the furlough is, for at least the next 4 weeks, everybody will receive zero pay for at least the next 4 weeks, but you will remain on health insurance. Basically with a furlough, the employee benefits stay in place. The employee's connection to your 401k or retirement plan stays in place. And the purpose of a furlough is simply, we don't have a job for you to perform anyway, for one reason or another. A lot of times it's done in manufacturing when one contract ends and there's a span of time between the end of that contract and the beginning of another. People will go on a 2-week furlough and they won't receive a paycheck, but they'll still have their health insurance in place so that when they come back 2 weeks later, everything is smooth sailing for their benefits and whatnot. So a furlough maintains the employment relationship. A furlough does not obligate you to pay accrued paid time off. A furlough would, usually come along with you in making sure that the employee stays on all employer-paid benefit plans and that you continue to pay the full cost for those benefit plans even while they are not earning a paycheck. And then it would be up to you to decide when they come back whether you collect the deficit in arrears or you give it to them by not charging them for the amount of withholdings that should have come out of their pay during the furlough period. And when you're doing furloughs selectively within the organization, it's very, very important that you create logical groupings of people that you're treating in different ways. And again, all of this needs to be documented clearly in the letters that you use to inform your people of why, of the fact that they are being laid off or they are being furloughed. And again, you should be giving them the rationale or the intent in the messaging of your letter. So if you're laying people off, the idea is that the position no longer exists because the company doesn't need it to exist. So due to the coronavirus situation, we've been forced to reflect strategically on the way in which our organization is structured, and due to some strategic decisions that we have made, the position that we hired you for is no longer going to exist as of such and such a date. Therefore, we are laying off all people that have had, that have your job title or that work in this department with this job title, et cetera, et cetera. You just basically tell them that the position no longer exists. Not that there's anything to do with them individually, or that there is any intention of bringing them back on the team if and when your situation changes again. Now, your situation may change in the future that necessitates the creation of the role again. But again, the decision to do a layoff is really a decision that's based around the fact that this position no longer exists anymore, and that could be a result of not knowing how long you're going to go without any revenue at all, or it could be a result of the fact that because of one one group of your customers is no longer in business, you know, you no longer need one specific type of role. And again, the concept of a furlough versus the layoff really is all about the messaging. Do we want to keep the employment relationship intact? Do we want to keep them on our benefit plans? You know, because at the end of the day, whether you furlough them or you do a layoff, your employees will be fully entitled to go to employment security and get 100% of the compensation that they're normally used to receiving for up to 4 months due to the coronavirus layoff situation that's going on. So again, from your perspective, you're not deciding whether to do a layoff or a furlough because of the fear of the unemployment cost that it will have on your account, because it won't have a cost on your account. So your decision is primarily on how do we want this to work once we start coming back from this, you know, from this disaster. You know, the pay for exempt employees, generally speaking, when you furlough them in the middle of a pay period or you lay them off in the middle of a pay period, you know, depending on the language in your handbook, you may or may not be on the hook for paying them for the full pay period. Depending on the language of your handbook, in New Hampshire, it is technically possible to prorate salaried employees' pay in the first and last paychecks. But again, you know, if you are doing a layoff and you desire to minimize the chances of creating a discrimination situation, you might make an executive decision to pay people for the full duration of the pay period, just so that there's nothing that anybody could point at to indicate that there was any ground for anyone to stand on. And then the pay implications for your non-exempt employees are really, you know, not super important because, you know, you pay them for the hours that they worked. So workforce reductions. There's one program that I did want to spend a couple minutes on, and I know we're down to the wire here, guys. I am going to stay online to let you ask questions and to go through the Q&A for at least 15 minutes after the end of the webinar, which is supposed to end in 4 minutes. And I will be available to anybody who's on the call that wants to ask me specific questions directly. But the New Hampshire Work-Share program is a program that was put in place under Governor Lynch, and it's part of it's one of the things that the Stay Work Play really advocates for. This is a program that enables employers to create a plan where rather than laying off a whole group of your staff, you would cut their hours in half, conceivably. And you basically apply for this program, and through your application, you streamline the process by which your employees will be able to receive partial unemployment from employment security. And then you have a weekly reporting obligation to employment security to report to them on the wages that were paid to these employees, the partial payments that you made to them, so that employment security can make sure that they're providing the unemployment benefit that is applicable to them through the work share program that you've had approved by going through the application process. When you apply, within 15 days, New Hampshire Employment Security will review and either approve or deny your application. And this is a way that you could, you know, thinking outside of the box, that you might be able to actually, handle something that might otherwise require you to lay people off, but do this in such a way that you keep your employees on staff, you reduce their hours, but it doesn't have a net negative impact on them because they're still receiving unemployment compensation for the difference between what they used to make with your company and what they're making now, and they could still be on your health insurance and your 401k plan and things of that nature, but it would allow you an immediate way to actually experience a payroll cost reduction. So it's called New Hampshire Work-Share. The URL is here on the slide, which everybody will get a copy of here shortly after the webinar. And I highly encourage anyone that thinks this might be applicable to them to give it serious consideration, because I do believe it's a very attractive program for those that have it working. So that all said, we're going to go to Q&A right now. We got 5 that were submitted. So yes, first question is, I thought this was April 2nd. Originally, the legislation for the FFCRA said that the legislation, the effective date of the law, would be no later than 15 days from the day on which it was signed into law. Technically speaking, 15 days, I think might have even been April 3rd. But originally, or no, maybe it was April 2nd, but 15 days, April 2nd was 15 days after. The DOL, when they issued their guidance on compliance, has been using April 1st as the date. So April 1st, all time off that's used for emergency paid sick leave or EFMLA purposes on 4/1 and after, you are obligated to provide the Bank of Emergency Sick Leave on 4/1, and you are obligated to comply with the rules under the Extended Family and Medical Leave Act for all leave taken 4/1 and later. 4/1 is the date, although it was originally, there was confusion around 4/2 being that date because of the way that the law was written on when it would be officially taking effect. So then we have, does paid sick leave apply to part-time employees? Yes. Yes. So this is also from a seasonal employer as well. And yeah, so if you're a seasonal business that runs from mid-May to the end of October, and you only have part-time employees, basically, as soon as you pick up operations in the middle of May, every one of those part-time employees is going to need to have a bank of their emergency paid sick leave available to them immediately on your first day of business. And that needs to be, done based on the average number of hours that they worked for you last season, or the average number of hours that they can reasonably expect to work for you this season. You need to use a reasonable method of determining what the average number of hours that they should be working on a weekly basis will be, and that's going to determine what your total number of hours in that emergency sick leave bank needs to be as soon as you open up. But this law does apply to seasonal employers. There are no exemptions there. The only caveat to that is if you did get yourself exempted from the rule, which again, I don't know how you do that right now, but if you did get yourself exempted from the rule, then you wouldn't need to comply. But that said, again, the way that this should work is that every dollar that you incur expense-wise to comply with this law can be offset by payroll tax credits on your 941 taxes, and it should be done in such a way that it actually you get your tax credit back in the pay period in which you incur the cost. That all said, there are some employers out there, like a daycare facility, for instance, or something like that. If all of your staff are unemployed right now, and a whole bunch of them are right now, in a position where they would qualify for this time, this COVID sick leave, theoretically, your cost on the emergency sick leave could far outweigh your 941 tax liability. And there's also a method that the IRS is putting in place to allow you to request an expedited return of the excess 941 or rather a refund from the IRS of the 941 taxes that you didn't incur yet liability-wise, but have incurred the cost on the emergency sick leave. So you will have a method by which you can get the IRS to send you in advance, those payments if you incur the cost before the 941 tax liability has accrued enough to completely offset that cost. So are the requirements for the economic emergency loan the same as a regular SBA loan in this personal credit and personal income part of the approval process? A good question, and these are all questions I asked the SBA myself. So the answers to the questions are that the requirements are not exactly the same. A regular SBA loan is a 7A loan that is done through a lender, with the SBA participating on the back end. The economic emergency injury loan is a loan that is established directly through an application with the SBA, and it does not involve a lender. There is, when I applied for our economic emergency loan, I did have to provide a personal financial statement, and I had to give them authority to pull up the last 3 years of personal income tax filings. And then I had to also provide a copy of the most recently filed corporate tax return. I also had to give them a breakdown of the bank debt liabilities that the company carries. And my expectation is that there is probably going to be, I would be surprised if they don't at least pull my credit report, but my understanding is that they will not approve or reject or deny any economic injury loan due to personal credit. That said, the economic emergency injury loan is one where I do believe the SBA will be looking for a personal guarantee from an owner for that loan, just like they would with a 7A loan. I do not believe that a personal guarantee is required for a 7A loan that is specifically related to the Paycheck Protection Program. In my understanding is that your personal credit won't actually make or break the approval of your loan for the economic emergency injury loan either, but I do believe that they will pull your credit anyway. I don't believe that they will reject you for credit reasons, though. That's part of the whole point. So do you have any advice regarding hazard pay and how to define that? So let me see, on this one, I'm actually going to come back to that one in a second here because I need to allow Leslie to chime in because I want her to elaborate a little bit on that for us. So, the last question submitted so far is, can you clarify if the expanded FMLA covers both salary and hourly employees? If so, we need salaried employees to record all their hours worked in order to receive the tax credits for hours that they are homeschooling children. Yes. That's exactly what we're doing at Checkmate. So yes, the expanded FMLA applies to any employee, hourly or salary, who has been employed for at least 30 days, period, across the board, end of story. So any employee who has been employed for at least 30 days, in addition to the up to 80 hours of emergency paid sick leave obligation, you also are obligated to provide up to 10 additional weeks of paid family leave if they cannot perform their essential functions because their child is home due to the closing of the school or daycare because of coronavirus. You are on the hook to comply with that rule for all people that have been employed for at least 30 days, whether they're hourly or salaried. Now, for the hourly folks, again, when it comes to determining how much are you on the hook for paying them, that is a function of, you know, there's a handful of tests that you can do for that. But one is if they don't always work 35 hours a week, then what is the average number of hours that they have worked over the last 6 months? If they haven't worked for you for 6 months, what is the average number of hours that they've worked for you for the duration of their employment? If they haven't worked for you for any period of time, or they're so variable that the idea of average number of hours is just, you know, kind of a silly concept, then you need to base it on what is a reasonable expectation that they would have of the number of hours that they will be expected to work on a week-by-week basis in the future. And then your obligation is to provide them with that number of hours of emergency or extended FMLA leave for the additional 10 weeks per week, as is determined to be their standard regular number of hours per week based on the analyses that I just described. If you follow at least a process that has some logic to it like that, and you document what you're doing, then you should have your T's crossed and your I's dotted on meeting your obligation for providing your paid FMLA for your hourly workers. And yes, this does mean that for salaried folks, you now would have a compelling reason to have them clocking in, clocking out to indicate, the hours through the day when they are actually working. If for no other reason, even, if only to document, what amount of this time obligation that you have now paid them for and can now receive a tax credit on because you've paid them for it, and also because, you know, these are onerous requirements that are now put on your shoulders. And if you don't do something otherwise, if you don't make it so that your salaried employee who you know is working from home and has kids, if you don't make it so that you're documenting some of that time, the time that they're taking care of their kid, as time that they're taking care of their kid, then when it comes time somewhere further down the road, you're going to have to have paid them their full salary, and then you're going to have to comply with your obligation to pay them for their 80 hours of emergency sick leave and their EFMLA, because you never documented any of what happened prior to then as emergency sick leave or EFMLA related. So it is in your interest now to put in place the changes that will be necessary to allow you to start tracking this level of detail for your salaried employees, so that you can make sure that you comply with the rules to the extent that they require you to comply with them, so that you can maximize your tax credits and that you don't inadvertently, you know, do something that's more generous here than the mandate requires. So with that all said, what I want to do is, you know, that kind of stops or ends my my presentation. Right now, what I want to do is I want to open up the call. I'm going to unmute everyone, and if anybody wants to chime in with an additional question or two, you know, I'm happy to continue the conversation for a few minutes. So I am going to unmute everyone now, and just you know, if people talk over each other, just, you know, one at a time, and we'll continue our chat here for a few minutes. So everyone's unmuted. You should be able to chime in if anybody has additional questions. I thought I was letting everyone talk. Okay, so here's another one. Can we do 100% EFMLA for certain groups of employees as a type of hazard pay? Oh, perfect, okay. Customer facing as an incentive for them to continue coming to work. And then the 67% for other employee groups like those who can work from home. Interesting. Can we do for certain groups of employees? Okay, so my response to this question is that so long as the employee is continuing to perform their essential duties, it makes zero sense at all for you. In fact, it would be contrary to the law for you to actually have them, you know, using any of these things. So literally speaking, in order for you to have an employee who's receiving pay for emergency sick leave, they have to be unable to perform their essential duties, and they have to be either home during their first 2 weeks of leave to care for themselves or care for a loved one or their child. But the idea of doing 100% EFMLA for a group of employees as hazard pay, as an incentive for them to continue coming to work, is not, so paying them that plus their actual pay for being at work. I would say no to that because, and this is one thing I didn't get into in the presentation, but technically speaking, where your obligation as a 401 is to grant immediately the bank of time that any employee can use for emergency paid sick leave, the obligation for EFMLA actually requires the employee to request EFMLA. And the obligation here is that you have to provide the employee with up to 12 weeks of pay and position protected leave, and that should be driven by the employee's need as opposed to your need to incentivize them to work. So if your need is to incentivize people to work, you know, just to show up in light of the fact that they could claim that they could be using emergency paid sick leave or EFMLA, well, you can, you know, when it comes to emergency paid sick leave or EFMLA, there is no rule here that's in place restricting you from requesting reasonable documentation from your employee to provide evidence that they do need to be using their emergency paid sick leave and EFMLA leave. And you know, due to that, again, if your problem is because there's now a motivator for them to not come to work, then you need to come up with an incentive outside of the EFMLA or paid sick leave concept to encourage them to get into work and do their jobs. Perhaps, you know, some sort of a bonus or an offer of, you know, for every employee that, you know, shows up on time at least 4 or 5 days a week, you know, for every 4 weeks that you do that, you get an additional half day of PTO added to your bucket, or something like that. But you know, it really would be something that you should incentivize in a way other than artificially through trying to manipulate how EFMLA works. I just foresee HR complications, you know, for you if you were to do that. So with that all said, if anybody has anything else, you know, you could put it into the chat box. I seem to have lost my technical capabilities for letting everyone talk here. So I am stuck either using the chat box or the Q&As. So let's look one more time and see if we have any final Q&As submitted. Okay, so yes, we have a clarifying question on the seasonal employer. So it's seasonal employer open 22 weeks with only part-time employees for 25 hours per week. They're on the hook to pay 10 weeks of FMLA plus 80 hours of sick leave. Nope. So based on that detail, what you've offered here is, what you've offered here is that you're open for 22 weeks. You only have part-time employees that work for 25 hours per week. My understanding right now is even though you're only open for 22 weeks, you have this obligation for up to 10 weeks of FMLA plus 80 hours of sick leave. You know, it's not 80 hours of sick leave in your case because you would prorate 80 hours based on a 25-hour work week. A 25-hour work week comes out to like, 60% of a 40-hour work week or whatever that percentage is, times 80 is what you would be on the hook. So 25 divided by 40 times 80 is the amount of emergency sick leave per person if they are working the 25 hours a week for you, that you would be on the hook for. And then the FMLA is an additional 10 weeks at whatever the fractional equivalent of 25 divided by 40 times, in this case, times 40 is per week. That would be the amount of hours of EFMLA pay that you need to pay for the 10 weeks that any of your staff might be out for EFMLA. Now, that said, again, this is to my knowledge right now. Based on the question, it's a very legitimate question, and I am going to do a little bit further research on the seasonal employer impact. Again, I've done a lot of research on this so far, and I have not seen seasonal employers called out in any way, shape, or form, especially yet at all. So with all this said, guys, I can't encourage you enough, whether it is, right now, the SBA, if you want to apply for a disaster loan, the website where you could submit your application has been down now for over a week, or better part of a week. It's at least 5 days. And now they're forcing you to fill out the paper application and upload the paper forms. And then you have to wait to hear back from the SBA. Additionally, with the Paycheck Protection Program, all of the lenders are going to be inundated by all of their customers, and they're going to have to process all of these loans, and there's going to be a delay between when we, submit our applications and when we get our Paycheck Protection Program loans. I encourage everyone, please, 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 contact your congresspeople, contact your senators, email them, tell them that your businesses are at risk, tell them that you are, they're enacting this legislation at the federal level, and then the SBA, their website is down. We can't apply for a loan. I'm a seasonal employer. I'm now obligated to pay for 10 weeks of pay for employees that won't even be employed for more than 22 weeks for my entire season. That's insane. I need you guys to please reach out to your Congress people. I know that it sounds like a pipe dream that you could actually expect that anyone will actually do anything with any of your inquiries. But if you do it, if I do it, if all of the people around you do it, we might be able to hope that we could get some attention from someone on some of these things. Believe me, these things that are keeping you guys up at night right now, they're keeping me up at night. And my goal here is to do what I can to provide clarity. We are going to have, some additional webinars coming up in the future, so please keep your eyes open for invites to those webinars. If anybody wants to be added to Checkmate's mailing list, email list, please email me at jrobinson@checkmatepayroll.com. And I will make sure that you get added to our email distribution list. I will also make sure that you get invited to any of our future webinars, whether or not they are chamber-related webinars. And then again, if anybody wants to have a conversation with me directly, if you send me an email with a couple of your questions to get things started, that's always helpful. And then I will do whatever I can to get to make some time to talk with you sometime in the next couple of days. And just email me at jrobinson@checkmatepayroll.com. Put chamber webinar in your subject line so that it catches my attention. And I will do whatever I can to make time to talk and help you out. So that all said, guys, I don't know, Emily, if you wanted to say anything as we close up the webinar.
I just wanted to say thank you again, Josh, for this great presentation, and thank you to CheckmateHCM for collaborating with us on this. I know that we all, have to make these changes quickly, and I really appreciate you jumping on board to work with us to share this info. So thank you.
Happy to do it. No worries. All right, guys, so I'm going to end the webinar. Like I said, everyone will get a recording of the webinar itself and the presentation. I'll send all of that over to Emily tomorrow, and she'll forward it along your way as soon as she can. So thanks, everyone. Have as good of a rest of your week as you can in these stressful times. And again, reach out if you need anything. Thank you.